Yes, coming to our corporate accounting class, now we are going to discuss about profitability statement in bank accounts, right? This is problem taken from Jain and Narang, page number 1.72. The first item given here is interest on deposits. What is that? When we are having the deposits with the bank is supposed to be pay the interest. So for that bank is paying the interest, so it is the expenses minded. All the items should be viewed in on the view of, should be taken on the view of the banking company, right? Not as per the customer. He is supposed to be on the view of the banking company. Since this is interest paid by the bank, so it is a expense. That interest expended, we should not take it as expense, we should take it as interest expended. Okay, so this should be in schedule number 15. Another one is commission. Actually this is supposed to be given in the name called commission, brokerage, exchange, etc. What is that commission? When we are getting the demand draft, then we have to pay the amount of commission or the exchange charges for any other item other than the deposits. If we are getting the facility from the banking company, we have to pay the commission charges. Okay, so it is a commission received in the view of the bank, so it is taken as other income. That 100 rupees of commission is taken in the schedule called other income. Next item, it is interest on loan. I am getting the loan from a bank. Okay, so for that I have to pay the interest to the bank, right? So it is a interest received by the banking company. So that's why we should take this item as interest on loan. Any amount of loan, any item in the name called loan received from the bank, it should be taken in the name in the schedule called interest. That related interest should be taken in the schedule called interest earned. Why? Because I am getting the loan from the bank for which I am paying the interest. So it is the income of the bank. That's why we have to take it as a interest earned. Next item is sundry charges. So from the name itself you can understand this is a expense. Sundry charges, it's a expense where we have to take all the expenses related to op bank in the schedule called the operating expense. Another one is rent. So any item of rent, taxes, etc., telephone charges, printing and stationery, those things should be taken in the schedule called operating expense. And the next one is a payment to employees. What type of a payment is this? It is not given. So it is considered this payment to employee is supposed to be the salaries or some other things related to staff benefits. Whatever it may be, whatever the nature of a payment, that amount is paid by the bank to the employees. So is supposed to be the expense in the schedule. We should take this in the schedule of operating expenses, that is schedule number 16. Then another one important point, if want you please put a mark on this, discount on bills discounted. See, if it is bill discounted, that goes to balance sheet in in the schedule called balance sheet, in the schedule called loans. Whereas here discount on bill discounted, what is this? This is discount on bill discounted is when when the banking company is discounting the bills, on that any of the discount received against that item, then it is a income. So we have to take it in the schedule number 13. Then, interest on overdraft. What is this? Over and above the available limit is named as overdraft. It's a loan item. Okay, so any interest charged on that, any interest collected against the overdraft is a income for the bank. That should be taken in the schedule called schedule number 13. And another one, like this thing, loan. Another one important item which is called a cash certificate. See, you please try to understand that loan is not confined with one particular heading. Okay, of course, the main heading is loan, but the individual thing is bank to bank that may get deferred. Deposits also bank to bank, that the name of the deposit may get deferred. Name of the loan may get deferred. And some banks may have the loan item, may offer the loan item in the name called cash certificate. Okay, so for that, any of the interest charged against that cash certificate, overdraft, term loans, or working capital facility, or loan facility, underline the term loan facility. Okay, so those things are interest paid on these headings. Against these headings are supposed to be the income for the bank and taken in the name in the schedule called schedule number 13. Next, auditor fees. Term itself is self-explanatory. This is a expense. Okay, for doing the audit, we have to pay some amount to the. We have to pay the charges. We have to incur the charges. We have to pay the fees to the auditors. So it is audit fees. This may be given as audit fees or auditors out of pocket expense or audit charges, whatever the name called. If it is a expense, that should be taken as operating. Another one is director fees, director salary, any item of a salary, those things are coming under operating expense. Another item given here is bad debt to be written off amounted to rupees 300. The amount of bad debt, please understand, this is only the bad debt, not the provision for bad debt. Provision for bad debt is different. Okay, provision for bad debt, that will coming under the schedule called provisions and contingencies. Next to schedule number 16, no separate numbering for that provisions and contingencies. Whereas this is only the bad debt, so that's why I have taken that bad debt in schedule number 16 in operating expense. Okay, then you total the individual schedule and fill the final total figure of individual schedules in the final statement. Then you will get the difference of total income of 8,000 with the total expenditure of 4,351. The difference between these two things is 3,649. Okay, that is current year's net profit. Again, you please understand that the current year net profit is qualified, should be considered for computing the statutory reserve. What is that? All the banks are supposed to maintain some sort of a reserve with the Reserve Bank of India as per the statute. Okay, so that statutory reserve should be maintained. Every bank should maintain that statutory reserve. Okay, that comes to 25%. At present it is 25%. That 25% should be calculated on the current year's net profit. Okay, suppose if you are given with any other P&L account, that should also be added with the current net profit for the ascertainment of the total profit, right? After this net profit, in this problem, no profit and loss brought forward. So net profit minus statutory reserve, no other reserve or dividend, no other thing is given. So 3649 minus statutory reserve, balance is the amount of 2730.75. This is the amount we have to transfer it to the balance sheet under the heading called reserves and surplus. On that point of a surplus, we should take this, we should show this 2730.75 in the balance sheet. Okay, again I repeat, what are all the items given in that? You fill the informations just like a fill in the blanks in this statement. After that, you take the informations, you uh, total the individual schedules, you balance it, you will get the profit, add with the previous profit, then you provide the reserves, making the appropriate appropriations. Finally is what that should be transferred to the balance sheet. Okay, this is a very ideal problem for P&L account. This is qualified for 5 mark as well as 10 mark.